So I'll start by welcoming everyone back to Fenwick's public tech company virtual situation room for COVID-19. The senior public company attorneys here at Fenwick have been having conversations among ourselves and with executive and board members at clients about the issues that they are dealing with in the current coronavirus situation. And we're capturing the substance of those in this videocast series. Today, a few of us have gathered together to discuss various considerations related to material non-public information that companies are rapidly developing as the COVID-19 situation evolves in their businesses, and considerations regarding updating guidance, insider trading, Regulation FD, public reporting, etc. I'm Dave Bell. In addition to being a corporate and securities partner, I co-chair Fenwick's corporate governance practice. With me today are Susan Muck, who in addition to being a securities litigation partner, also co-chairs our corporate governance practice with me. Ron Bensour, a partner in our capital markets and public companies practice. And finally, Jamie Evans, who is a partner and co-chair of Fenwick's capital markets and public companies practice. Many companies are recently gave guidance about their current quarter and or the current fiscal year. Since then, the world and national economies and many industries and companies have experienced significant changes. And in addition to adjusting operations in substantial ways, management teams have begun to assess the impacts to their operating results in coming periods, contingency plan for future various possible scenarios, and adjust business plans. Meanwhile, stock market participants are keen to understand the impacts of these changes to the companies in which they are investing. Ron, maybe you can kick us off with an overview of Regulation FD to lay some initial groundwork, and then discuss maybe how the coronavirus situation then factors in.
Sure. Thanks, Dave. So at a high level, the public securities laws under a set of rules called Regulation FD prohibit the selective disclosure by public companies of material non-public information to stockholders, analysts, market participants, and other individuals where it would be reasonably foreseeable that they would trade on that information. One actually important exception to note to that general set of rules is that when you're disclosing information to a party that's under cover of a non-disclosure agreement, those sets of requirements actually don't apply. Why is that sort of relevant during the current COVID-19 pandemic? Well, we're seeing companies across the board issue a lot of communications around COVID-related issues, whether that be financial impacts to their business, whether it be the current quarter, their guidance, impacts to their workforce, work from home policies, things around compensation, layoffs, salary reductions. We're also seeing a lot of communications around social support programs that companies are supporting. And companies really have to ask themselves whether their communications around all of these COVID-19 related issues are compliant with Reg FD, both in terms of whether they are actually revealing material non-public information to various market participants, and then also kind of thinking through who these communications are going to in order to better comply. Finally, I guess worth also noting that to the extent that you do reveal material non-public information to the group of individuals or market participants that Reg FD is meant to cover, to the extent that that communication is intentional, you're actually required to release that communication to the broader market, basically concurrently with the communication to the individual party. And so there's a variety of ways that companies do that. You can do it via Form 8K, but other ways to do it would be through the company's IR website, to the extent that the company had previously noted that as an FD compliant channel. Some companies use social media. Again, there's some best practices there. Another way to do it is through a conference that you've previously announced to the public, and making that conference, a video conference available, or audio conference available to the broader public. So that's sort of the high level. Would kind of be interested to hear from other folks on this call what they've been advising clients on in terms of how to best comply with Reg FD given the current landscape.
I've definitely been seeing clients get reach outs from trading houses that are trying to organize conversations with investors. Need to be very careful about those things. Need to be very thoughtful about how you're doing that consistent with Reg FD. There's going to be a lot of second guessing here for people that are participating in those. I would note, given the timing on the calendar, we're right at the end of a quarter for many companies. A lot of companies normally would be in their quiet period now, and now's a good time to be observing that, to be thinking thoughtfully about that. Where there is some interest in participating in these kinds of events or in investor conferences generally, as you note, then they need to do it in Reg FD compliant ways. Make sure that it's a broadly accessible forum, that they've announced in advance reasonably, et cetera. And so there are ways to do it, and then you can have follow-on one-on-one conversations as long as you stay within the four corners of the things that you've talked about publicly, and not touch on anything that's material beyond those things. But it is something that everybody I think needs to be thinking closely about.
It's probably useful just to review very briefly what's material in this context. Materiality is anything that a reasonable investor would be likely to view as affecting the market price of the security. And so we generally consider material items things like pending M&A or an unannounced M&A transaction, the acquisition or loss of a significant customer, a change in an executive officer position, a resignation of an executive officer. And for purposes of this discussion, I think it's particularly important to focus on a determination by a company that they are or are not going to make their guidance. That would generally be considered material. And it's that possible materiality that I think a lot of companies are currently struggling with as they begin to do some scenario planning, taking into consideration the effects of COVID-19 on their business models.
I think also one thing that's really important to keep in mind when you're evaluating, especially how the SEC is going to look at communications that you've made from an FD standpoint is, at the end of the day, when the SEC is looking at this stuff, they're looking at it with 20/20 hindsight, right? And so to the extent that you have these sort of private communications with analysts and stockholders that, might, from your perspective, not constitute material non-public information, but then, a day later you see that the stock price has moved significantly. Those are things that you really need to keep in mind and track very closely, because that's what the SEC is sort of looking at. And, and obviously if the stock price moves after you have those communications in a significant manner, that would sort of, to some extent, imply that some sort of material non-public information had been previously communicated. It's very important, we're telling companies to, oh yeah, go for it, Jamie.
No, I was just going to add two things to that. I think that sometimes get overlooked at least a little bit. One of which is, in this environment, I'm seeing a lot more communication from various components of the organization, just given how dynamic and fast moving these things are. You have almost a broader set of spokespeople that are making public statements with respect to the company. And I think that understanding whether or not your disclosure controls as they exist now are really well designed to capture those more frequent communications is something that is at least a trap for the unwary on some level. So I think, just revisiting disclosure committee practices and procedures is something that would be prudent here to make sure that you understand who in fact is speaking on behalf of the company and what those channels are.
And the other thing that's important as a corollary to that is also understanding who knows material non-public information, having good tracking on that information. FINRA may be working from home, but they're still in business right now. And they're going to be paying attention to what happens in the market. If there are meaningful movements after public announcements, they're going to be following up with questions about who knew what when. And you also need to think about it from an insider trading perspective. Having a control around who knows what information so that you can decide who needs to be blacked out if it's material.
That's incredibly important. We've seen FINRA and the SEC more active in the post-COVID environment than before. So over the last month and a half, we've seen more FINRA investigations open than before. We've seen more SEC investigations initiated than before February. It seems to be happening almost every day that we'll get a notice of a new SEC investigation. And the investigations are heavily focused on insider trading allegations or the possibility of insider trading, precisely because there is such a multitude of participants in these intra-company discussions about the effects of COVID-19. One of the things we often suggest to companies is that they identify someone in investor relations who will track the company's stock price over the day. And if you notice an unusual pop, to just make sure that you double check whether there's been any kind of inadvertent disclosure. Right now it's difficult since the stock market is so volatile and each individual issue is so volatile. But it is very important to keep an eye on your stock price and to ask yourself whether there's a possibility of a leak when so many different people are aware of material.
And some things you just can't keep from being broadly known inside of company. If you, because you're changing your expectations for the year, are lowering a quota for your entire sales force, for example, that's going to be broadly known in the inside of the company. You're probably going to have to think about blacking out everybody in your company. Mm-hmm. Right now, many companies are in their blackout windows, and so it may be thinking about not opening their windows up until they've disclosed whatever they're going to disclose in their upcoming earnings announcement. But for those companies that are in the market trading in their securities in buybacks, or that their windows are, for various reasons not aligned with the month end right now, they need to be really thinking closely about this. And that maybe circles us back to thinking about guidance and whether companies should be thinking about updating guidance and or withdrawing guidance. And to a degree, as we've talked about, they need to be, whatever they do there, if they do something, they need to do that in a Reg FD compliant way, think about the insider trading implications of it all. But they should be thinking about that subject directly. A lot of companies are now coming to recognize that either positively or negatively, COVID-19 is impacting their results. There are plenty of companies that it's not going to impact their current period results, but maybe is going to impact their outlook in future periods or next year, depending on how their businesses worked. A lot of our companies are, our clients are SaaS or subscription businesses, and they often have a pretty steady and predictable revenue flow in the immediate period. They'll be keeping an eye on important indicators like what's their churn or their net retention rate. But absent indicators there probably aren't going to have a near-term impact, but they need to think about what are they going to say about guidance or outlook going forward. Maybe Susan, how are you, when you're talking to clients, how are you thinking about advising, and Jamie chime in as well, on whether they should be thinking about updating or withdrawing guidance, and obviously bearing in mind where we are at the end of a quarter for many companies.
So for most companies, as they end this first quarter, as you said, David, they are in a quiet period. In my judgment, the most prudent thing a company can do, if you are within guidance, you may be off a bit, but if you're not materially off, then I think it's prudent to go ahead and wait until your typical earnings announcement. And at that point, you report your results. I believe the market is certainly anticipating that there'll be some significantly negative or unfavorable earnings announcements. And while, yes, there may be shareholder litigation as a result of earnings and misses, in general, I think there's an expectation that a lot of companies are going to miss. There are some companies, consumer good companies, even in tech goods, where they depend on retail business, and obviously there are certain products that are just not going to be able to be shipped by Amazon or other services, and so there's going to be some significant misses, and some companies are going to know by now that they are going to miss their Q1 results pretty significantly and don't want to take a chance of waiting any longer. Those may be companies where, because of the amount of people who are aware of the information, there's a concern that there may be leaks, especially for companies where there's not a company-wide blackout. You have rank and file employees who may be trading in the securities, and the company may decide that's just too significant of a risk to take and go ahead and pre-release. And then there are going to be companies that have good news and may decide that they want to get that good news out there.
I would agree with all of that, Susan. I think that one thing to be especially sensitive to as we reach quarter end and move towards preparing for closing books and thinking about preparing earnings and 10Qs is that you now are in a period where if you're speaking about a completed period, you could end up with both FD concerns, you could end up actually triggering an 8K requirement. So there's a litany of, I think, traps for the unwary in this period especially. And as folks start to think about what they're going to do, with more forward-looking guidance, frankly, I think that's another area that will be really challenging, in terms of your ability to provide or even confirm, full year guidance. So I think there are going to be some real challenges. I know that in another session, we're going to get into some of the challenges and nuances around, what companies will ultimately need to be thinking about when they make public disclosures on earnings and in their 10Qs and things like that. And there will be, I think, a lot to think about as you both look backwards, but also think about what are the known trends and uncertainties in your business at this point.
Absolutely.
All of that being said, I do think for most companies, absent some reason that you, as Susan already elucidated on, need to pre-announce, you'll wait until your regular earnings call and then give an updated view of guidance. And that may be simply withdrawing the prior guidance that you've given and saying the situation is still too fresh and evolving for us to give guidance going forward from here, or it may be directional or a qualitative view on it. And for some companies that are in some kinds of businesses, they may be able to give very specific guidance still on the upcoming period, but just adjusted from the guidance that they had given before. So it all depends on your facts. You should be talking obviously closely with those of us on this call or your other securities counsel to make sure you're thinking through all of these issues. But for most companies, that's probably going to be the pattern is when you get to your regular earnings call, then you'll have some view about how you're withdrawing and perhaps updating guidance. I do want to express some caution about updating guidance though, given how fluid the situation is and how much things continue to evolve. I think many companies will be well served to simply be perhaps directional, but not specific in terms of how this is impacting their outlook going forward.
That's a really great point. And I think also reminds me of some practical advice. Companies are doing a lot of scenario planning right now, trying to get a sense for, if we do update guidance, what do we go with? And I think it's important for companies to be mindful of to whom they're distributing a lot of that kind of highly sensitive information. As I said earlier, the SEC is looking carefully at insider trading. And so this is a time where you want to make sure that when you're in that scenario planning phase, you're including just the people who really need to know so that you're getting the benefit of their thinking, but without such widespread disclosure that you're potentially infecting other people with knowledge about scenarios that may be far from likely to come to pass.
By the way, one of the benefits of waiting on pre-announcing results and also potentially updating guidance, waiting to do that till sort of into the carrying that forward into the April timeframe, which many of our 331 companies are able to do, is just given the uncertainty around the COVID situation, you've just got a lot more insight. You've got an additional month basically where you can see how it's sort of impacting your business through the current quarter. So to the extent that companies can hold off a little bit and they haven't really blown their guidance yet, or either I guess positively or negatively, it might be prudent to hold off until they're able to in April.
So I think we've touched on a lot of important points. Why don't we call it a session for today? In future conversations, we'll obviously dive deeper into a few points. As Jamie noted, we'll probably come back on a session around thinking through carefully things like MD&A and risk factors and other public disclosure items. And perhaps also some of the 8K triggers that we'll need to be thinking through depending on what actions or companies are taking. Similarly, we're going to come back and talk about some of the other subjects that may be impacting companies right now. Things like internal control environment, things like proxy statements, annual meetings, stock buybacks, perhaps things along those lines. And so we invite you to come back for future episodes and keep a lookout for when those are posted. Thanks.